Good morning, Skyler.
Good morning, Chad. Happy Aloha Friday to you,
How
sir.
you doing, buddy?
I'm good.
Good
How
to
are you?
see you. Aloha.
Likewise. I know, aloha. It's I guess this weekend is supposed to be super nice and super hot. So it's already looking like it right now too, which is nice.
It is. It was very warm this morning during my walk with Willie at about 7 a.m. It was already like 78 degrees in Carlsbad. So
Yeah.
I think it's going to be a scorcher.
Yeah. Yeah. Luckily I don't have um AC, so gotta figure
Nice.
out what
A couple quick things to talk about. I
Yeah, buddy.
think
Let's do it.
one that people want to hear from you is the markets have
Yeah.
been arguably on fire uh, since March. Upward trend. What's going on with that and why?
Great question, Chad.
Thank you.
Um, it's when the Federal Reserve put as much money as it did into the system, it basically has propped up um, and has given people optimistic views on companies and what the expectations are of these businesses as we get through the coronavirus, because a lot of the money that was given to us or given to Congress to redistribute has basically gone back into the hands of the people and businesses and whatnot. And so that's really made it look and feel like we're going to get through this whole coronavirus thing quickly and it's going to be fine and we're going to get to the other side of it where business is going to get back to normal and usual, and we're going to start making money again. So from that perspective, that's kind of what's been happening. One thing to remember, though, Mr. Boyson and everybody
Yeah.
else, is the stock market is a leading economic indicator, meaning the prices of the stocks that you see right now are reflective of what people think is going to happen.
Right.
It's leading ahead of the economy.
Not what's currently happening.
Correct. Because currently so there's two different schools of thought. One is the technical kind of analysis, which is like looking at charts and seeing how the momentum is going and where everything else is as far as that kind of data. But then there's also the flip side, which is the fundamentals, and that focuses more on like the earnings and revenue and that sort of stuff.
Right.
So we generally tend to price in a lot of the fundamental data ahead of time, and ahead of that is usually what we see as far as the technical indicators. Yeah. So one thing that I wanted to show actually today is some of the different indices that we have been watching and seeing in the last couple of months, because I think it's important for people to kind of have an idea of how everything is going. So this is essentially the beginning of the year. This is Yahoo Finance. Anybody can go on and check this out. And again, looking from a technical standpoint, this is kind of how the market has reacted and different indices and whatnot. So first thing here is started January 1st, basically till yesterday. And this is SPY, so this is the S&P 500 index. This IXIC, this is the NASDAQ composite, the Dow Jones Industrial Average, Emerging Markets Index. GSG is commodities, and then VNQ is real estate. So one of the things that we can see here is at the beginning of the year, we're kind of, we were going up, everything was looking okay. Something that went down a little bit was the commodities here. But one thing I want to focus on is the SPY here, which is the blue line, this little thin blue line here. And the blue line here basically went from boom all the way down to almost down 35 or 30%.
And for most people that don't study the stock market every day and stuff like that, what does the S&P represent more or less?
Good. Another great question, Chad. Thank you.
I'm full of
The
them today, buddy.
the S&P is a broad market indice, and it's market cap weighted, meaning there's 500 different companies that Standard and Poor's, who basically run the index, that believe make up the economy as a whole. So 500 different companies, publicly traded companies, and because it's market cap weighted, it basically means that the bigger the company, the more weighting there's going to be in the index. So
Okay.
as an example, the top 5 companies in the index are, basically the FANG stocks. So Facebook, Apple, Google, Netflix, those sorts of companies. And because they're very, very large companies, it makes up a really big percentage of the overall index. Something like 25% is made up of 6 stocks. So it's pretty crazy just to have that idea. That those same 6 stocks make up 44% or 45% of the NASDAQ. So the NASDAQ, again, is this kind of gold line here. As you can see, I don't know if you can see this here. It's jumped up this year to over 22%. So again, because a large part of the index is weighted in technology companies, which have really big balance sheets, they've adapted to the online and virtual presence and everything. It's really outperformed, and I think it's going to continue to outperform, meaning it's going to do better than some of the other sectors. But overall, you can see that, like, since the beginning of the year, the S&P 500 is almost up 5.5%. The NASDAQ is up 22%. But then we kind of get into some of the other indexes here, or indices, and really sectors for that matter. So VNQ, again, this is the real estate index. And Chad, as you can probably appreciate, when we look at the overall broad market of real estate, we're not just looking at individual.
And this is also nationwide, correct?
Correct. Yeah. So nationwide, the index itself is down 11%. Doesn't mean prices or real estate is down 11%, just means that the index is down 11%.
Right.
And same thing with commodities here, which is almost 33%. And then the emerging markets is down, 1.3. But anyway, long story short, as the Federal Reserve pumped money into the system, the speed at which the recovery in the market has taken place is really, really just amazing. There's really no other way to put it. But again, a lot of it is related to what people think and how people are looking at the future when it comes to investing in business and stocks.
Right.
So one thing that I also want to show is, normally when we do these sorts of comparisons, we can't just throw everything at the equities or the stocks. We have to look at the more fixed income side of things too, so the bonds and whatnot. The reason being is because it's not an apples to apples comparison. No one, unless you're 20 years old and you have 45 years until retirement, you should be 100% in equities or in stocks. You should have a blend of stocks and bonds. So I wanted to show this here, which is it's it's a more realistic view of how the bond markets have been reacting in the last couple of months. So the HYG, this is a high yield bonds, so corporate bonds that basically pay more than the treasuries do, which right now I think the 10-year is something like 0.5% or just over 0.5%. So it's really, really low. And then we look at some of the other things too, which is AGG. This is the aggregate bond index. And then something that I also wanted to show was gold, which a lot of people have been talking about recently. And then also the relationship between that and the dollar, because the dollar is also as money's been put into the system, it's almost as like when there's more of something, it's worth less. You know what I mean? Like, I'm sure as you understand with houses and, basically selling real estate.
That's why property values are continuing to go up, because there's low inventory.
Exactly.
People
So
willing to pay more
yeah,
for
totally. So you can say the same thing about basically everything else um, in the markets. The dollar in particular, um, as more money has been put into the system, it's been a little devalued because, again, if there's more of something, it's worth less.
it.
There's some talk about inflation. A lot of people or a lot of economists think that it could be an issue, but right now it's not really seeming like it's going to be a problem. But anyway, I want to jump into this gold here too, because the gold is something that I've been hearing a lot about. And generally speaking, when there's a lot of volatility, when there's a lot of people who are scared, uh, most folks tend to think of gold, silver, precious metals as places that are, really kind of safe haven assets,
Mm-hmm.
which is why it's been on this tear. And you can see right here, it's up almost 40,
Yeah, I heard. I
43%.
don't know if the silver is part of that, but somebody the other day was saying something about silver being way up as well. So I'm sure they're both up in a
Yes.
similar fashion.
Yeah, they're both up. Again, it's because the uncertainty regarding the market and where everything is right now, interest rates being low, so that you can't really get a lot from bonds. So gold is really the time tested, and silver are the time tested metals that people think of safety. And
Do
so
you have
that's
any
kind
gold bars in your closet or your
of
safe?
I can neither confirm nor deny.
Yeah.
But yeah, I mean, you could see like it just at the beginning of August, it jumped up to almost 60% from the beginning of the year. From the bottom in March. It's up substantially. Same with silver. But anyway, um, as we move forward, there's definitely going to be some more uncertainty. We have to remind ourselves, though, that even in an environment where interest rates are really low, you can't get much in the bond market. Um, it doesn't necessarily mean that you have to throw everything in the stock market, and that's really kind of what's been, I think, the driver there is there's no return that you can get. There's really nothing that you can get from a return perspective in the bond market right now, other than, going to high yield, which is a little bit more risky because, those are the companies that might have had some issues during the coronavirus that has started to issue bonds at higher percentages because they need the money to sustain their operations.
Right.
So again, don't I think for the folks that are watching, just remind yourself or think about, if you are in an environment where things are really kind of volatile and crazy, it doesn't necessarily mean that you have to put your money in the stock market in order for you to make money. It just means that things are crazy right now, and having a plan to, get through some of these periods in, your investing career or your life or whatever, that's what's, I think, more important, because,
Right.
you don't want to necessarily put everything in there. And, as things are just going like this, you're just like sitting on the edge of your seat, hoping that it doesn't go down more. You know what I mean? Which has happened. So right now, I think overall summary, cautiously optimistic, but also very well diversified amongst many asset classes, bonds and stocks. I think that's what's going to really smooth out some of the ups and downs of what we're going to see here in the next couple of months as we get into fall and winter. And coronavirus is still an issue. Vaccines aren't here yet, so it's just something to be aware of.
Right. Well, thank you. I think that was pretty insightful. One of the things you mentioned was the interest rates, which for me is obviously a point of interest. No pun intended. Did you want to switch the screen back, or
Oh yeah, sorry.
am I only seeing the big screen? I can't tell.
I'm
Oh,
there you
there
go.
we go.
Yeah.
Yeah, so you mentioned interest rates, and obviously with what I do, that's a huge part of, people's ability to buy or people's willingness to buy real estate. With the rates, I've seen somebody at 2.875. I saw another person at 2.9. We're seeing a lot of numbers in the sub threes on the rates, which is just crazy. And I know we talk about this every week, but it's like, it just seems like they're staying right around there. Yesterday, we'll have to confirm this with our good buddy Mark Datnow, but he said that the rates kind of jumped up either a quarter or a half point yesterday. And I know earlier we mentioned, the Fannie and Freddie loans. There was a lot of people are doing refis right now. And again, we'll have to confirm some of this with Mark because I hadn't had time to look up any of the info on this, but I think you mentioned a 50 basis point kind of a tax on the refis, which obviously affects how much it costs to do the refi. So that was interesting. But again, maybe next week we can get Mark and see between this Friday and next Friday, see what kind of goes on. Because I also read an article saying that, next year in 2021, we're going to see rates creep back up again. And the markets have been doing well. And the inflation rate is moving swiftly, to say the least. And I think we're going to see the rates jump back up. So the people that are getting their refis in right now, the people that are buying their homes, the 30-year fixed at 2.875 should be pretty psyched. You know what I mean?
Oh, for sure, man, for sure. And that's to that point, the that 50 basis point or 0.5% increase in refi percentage,
right,
or mortgage percentages is man, that could
it's not
mean
insignificant.
A lot. Yeah. Right. Like if it was maybe like 10 basis points or 0.1% or 0.2%, it might not be that big of a deal.
Right.
But I mean, 0.5% can mean the difference between, a $2,000 payment or a $2,500 payment. So it's could be a lot. Could be a lot,
It could be.
But yeah, we'll chat with Mark and see what the deal is there. We'll pick his brain and see what's going on.
Cool. Anything else for this week, brother?
I think that's it, my friend.
All right, man.
You're off somewhere, aren't you? You're going somewhere?
Sedona, Arizona.
Bring your mask.
Only 127 degrees, and yeah, should be nice.
Camping or what?
No, my girl got us she got us a hotel at some place, so we're just going with the flow, man.
Nice. I was just up at Mammoth this last weekend. It was the first time I've been there in the summer, and dude, it was so cool. Like there was.
Oh, it's epic in the summer, huh?
I never realized how cool it was. There was like mountain biking and fishing and hiking and just so many people.
It's all there, man.
It was cool.
We got to connect with nature, brother.
Yeah, reconnect.
That's huge. Connect with nature. It'll reset you, and you can come back and start working and not feel so depressed about it.
Exactly. All right, buddy. Thanks,
man. Thanks again, man. Aloha.
Aloha. Have a good weekend.